Welcome back to RAR Business Institute, Part 2, QuickBooks. We're jumping into transactions, and this is how it goes. Quick reminder, if you are watching this video for the first time, kindly subscribe to support this channel, give a video thumbs up, and give comment what you like or what you hate about this video, so that we are able to produce more quality video next time you watch. Thank you very much. What we learned last time was company setup after installation. Today we are going to do transaction, but before transaction we have to start by entering the name of customers, suppliers, etc. Let me remind you that this is a workflow chart. This workflow tells you how everything is organized and should be coordinated inside the QuickBooks. The customer, the suppliers, the employees, company, we have charts of account, items can be adjusted. Then we have banking, where we reconciliation, we write the checks, we can print them, etc. Kindly be reminded that QuickBooks has a payroll system which is not flexible to our Kenyan system because of statutory deduction issues, NSSF, NHIF, PAYE, HELB, etc. QuickBooks is not able to handle those. There are so many alternatives, one of which I can give you is called Swan Payroll, compatible to every system, even the phone, because they are made out of Excel templates, and this one do a lot of things. NSSF, NHIF in their correct format, plus PAYE, and even the P9 forms that you can query on at the end of every financial year. Take note, first step is we want to create our customers, those people who consume our goods. So you come and say customers, customer center. Then new customer job, new customer. You want to create the name of customer very fast. This can be name of people, the name of the customer. You can copy it and paste it there, because a customer can be an individual person or a company. You put these other things. Of course, you don't do opening balances, not unless you have had some transactions with this customer before. Contact, we can just do anything for the sake of email. That's enough. Okay, we've created our first customer. Let's create another one. Customer. You come from up here, customer center, then this will come. So you say customer, new customer. Our customer will be, the next customer will be that's the name of customer. You can copy paste it here. Good. Date which you happen to have this customer. Let's give the contact, can be anything. Email, the same. Two customers will be enough for transaction. If any case we'll need more, we will create more for that purpose. So you could use next to go to those customers, or you could use OK. Then this one you can add new. Adding new give you option to add more particulars for this customer, like you can see city, county, postcode, etc. and the address name. Sometimes you can just copy them, like if you copy, automatically they come here if you copy what has been done there. But that's enough for customers. Let's now create suppliers. Now that we have our two customers, take note. Let me go back a little bit. Customer center. Take note that while at customer center, you'll see various things you are able to do for this customer. For example, if I come to transactions, I'll be able to know and even single out the transaction of a particular customer or all customers. For particular customer or all customers, you'll be able to see them down here, and I'll be able to explain that one in details at a later date. This transaction, you can also print them, you can export to Excel, or you can put to Microsoft Word, especially if you want to write those letters for communicating with your customer, be it you want to remind them of the pending payment, the pending balance, or even good message or well-wishing messages through your customers. You can use this word via mail merging. Mail merging is trained in one of our videos under Microsoft Word. So if you are not sure how mail merging work, you can find that video in our channel and you are able to find it out there. So let's do the suppliers. And for those people who are using Windows 10, this is the best for Windows 10, no dragging and very compatible. And these videos, if you go to the channel, they are arranged in a different playlist. If after subscribing to our channel, you can go to the playlist. From there you'll be able to choose any video you want, and you get the correct content there. Thank you for listening. Let's get to supplier center. Same procedure. Supplier. Let's give supplier a name that will be that's our supplier. Let's give them company, can give them contacts and email if possible. The next that's our next supplier. Just those two are enough to give us to give us good transactions. All right, we now have suppliers. Same case as customer, we too have the print, we can export to Excel, etc. Apart from the suppliers, we have what is called HM revenue and customs, and we also have tax agency and sales. Ensure that for tax agency and sales you change this one to KRA, simply because tax agency in Kenya is the KRA, short of Kenya Revenue Authority. This is the organization responsible for collecting of tax for the government. Now, if you do KRA tax, it is much easier. Remember, KRA comes in your book as a supplier, simply because this person supply you with good, conducive environment to do business through the government, and in return you pay taxes to do the business in that environment, to be secured, and to pay for your leaders. That's where your taxes go. So in your company relation with this KRA is very crucial. Remember, there are those few companies who don't pay tax, and as a law, the law requires that they must have a certificate to indicate that, especially if it's an NGO type of company. Yes, so take note. Let's say customers, I want to go and create list of items, and this is how list of items is created. Item lists. Now on the list of items, we have three things I want to explain. Item, new. We have service, we have stock part, and we have non-stock part. Service are those things that they don't have supplier, or if they have if the suppliers are outsourced, you cannot quantify them. Yes, like how many tutorials, 3 tutorials, 4. It's not service. Services are things like banking, consultancy, trainings, salons and barber shops, hospitals. Those guys offer services. We have stock. Stock are things like things that you can buy at a lower cost from supplier, and because of warehouse, transport and tax, you'll sell them to customer at a slightly higher rate, and you make your profit also out of that, and that's the stock. Then the third part we'll be dealing with is non-stock part. Non-stock part are those things that they are neither services nor stock, but they used to bring in money. For example, entertainment industries, those are non-stock part. You cannot quantify the amount of non-stock part from that, so that is non-stock part. For stock assembly, this is in terms of, let me give you an example. Stock assembly, like in the supermarket, you can have various groups of stock. All of them are stock, but in different groups. So you can decide that let electronics be in their own group, that will be in one stock assembly. Then again, the perishable goods, kina milk, bread, they also be in a different group. Clothing, cosmetics, etc. You can be able to classify these in different assemblies, and that one work when your company is dealing with a wide range of products. So let's start by doing those just two to save some time. So services, bookkeeping service, service, and we'll explain for you how we use this bit of sub item thing. Remember, we have a unit of measure which we don't use with this because this is not, cannot be weight, but let's stick to that. Bookkeeping, we keep the books at that cost. We must indicate this is going to our income account. Consultancy, consult at that. After choosing account, you can just go to next, and sometimes you give this consultancy description, like consultancy, like if you go to some hospitals for you to see a doctor, consultancy fee is only 5,000 for seeing the doctor, then the whole amount will now come to 15. So you can give those descriptions there if necessary, if you are in consultancy type of business. You know what I'm talking about. Next, you can just ignore. That is done. Now let me create stock. Let's start again so that you are able to follow the procedure. You want to create the products again, you just come to list, item list, item new. Now we are dealing with stock. Stock, we can sell computers. And you see, you still have the unit of measure there, per item, per single, per multiple, things like that. Let's just stick to this. Computers, you buy computers at only 3,000 shillings, sell them, smart profit. And remember, for stock you must put on hand. On hand is the quantity. Maybe we bought 50 pieces, and you put the date here. You also sell printers. If you have questions about any of these, you ask later in the comment. I'll be able to give you a quick answer, or alternatively I can make a separate video just to capture that area. you follow closely. You have to subscribe and click that bell notification so that whenever we release such videos you get them. Printer goes full. That's all that. I have 100 pieces. I said it was enough. We now create non-stock part, just one or two. Entertainment. Entertainment is very expensive. Starehe gharama, as they say. I think that's enough. Or if we do the next one here, can be let's just do that one is enough. Now we have done all those. We've created customers, we've created suppliers, we've created list of items that we're dealing with, and that is now done. Now I want us to set tax. After setting up tax, then we'll proceed and create another thing. And this is how we create tax. There are two ways: VAT, VAT code list, VAT code new. We can create our VAT here. VAT is taxable. Right, this is standard. Write the description, and we want to create for sales because that's what we deal with as a company. We give more attention to our customers. So you say add new, but item, what item we had said is VAT, VAT standard. Formerly it was 16%, but now because of COVID it is 14%. This can change. If it changes, you are always able to correct it immediately so that your system doesn't give you issues. And remember, the VAT agency now, you only find carrying the list. That's why I said it's always important to edit that to carry so that you have it's flawless throughout. VAT on sales, in case of refunds, is on sales. Then you say okay. With our VAT set, we are ready to go. One thing we must do is that before we start transactions, we want to do what's called charts of account. Charts of account is that list of the accounts our company are dealing with, and this is how it is organized. You come and create charts of account, then straight away transactions. Let's say company charts of account. Now these accounts, usually it is recommended that if you are doing accounting, they are created in order of permanency. For example, you create land and building, furnitures and fixtures, motor vehicle, like that. But the system doesn't use that rule. The system always sort them in alphabetical manner. So just create to file new. We'll start with fixed asset. You know, our fixed asset are things like land, building, machinery, equipment, you see. Then we have our bank. We'll create our bank account, petty cash, current, saving, money market, and pesa, credit cards, etc. We have our loans, we have our credit, and equity, which in most cases is the capital. If you want to track capital, you create the equity. Equity tracks of money invested in or money taken out of the business by owners or shareholders. Now let's start by fixed asset. Sorry. Now let's create fixed asset. I'll go the other round so that you are able to see the procedure, because that's what is important. Land and building. You may put this description. This can be land of organization, or simply building could be our offices, things like that. We always do that in the description. Good. You must not forget entering balance. That's the cost of our land as of, indicate this one. It's always recommended put at the beginning of your financial year to help us track depreciation, because later on in this program I'll show you how to do depreciation. So yes, before I create next, I'll just repeat the whole procedure so that you are able to see very fast, but this time around very fast. Company, charts of account, account new, it's a fixed asset, continue, furnitures, and fixtures. I'll leave depreciation this description. I just our furnitures, go for that. The vehicle for official, that's for official use only. Good. Revenue. We were dealing with office equipment. We are still in fixed asset. Official use only. Office equipment is not much. Is revenue. Take note, we were dealing with fixed assets. Now we want to do some current asset. Current asset, you do it from here. Now we have things like bank. Account new. Bank. Continue. This family bank. Description. Current account. Remember, you can have current account, fixed deposit, or even saving account. Bank account number, of course, you'll have there. Something like that. You enter the bank balance. However, this is not a must. Sometimes you have money, sometimes you don't. Statement ending date. Good. For the purposes of reconciliation, let's do that. Save a new. Another current asset, you can come here. This is other current assets. Remember, the reason why I'm using this bank is because it falls under our cash at hands. Let me show you. If you come to account new, then you choose bank. Bank, we have petty cash, current, saving, etc. Even M-Pesa. So I'll do petty cash and I'll do M-Pesa. Continue. Let's start with M-Pesa, because I know most of you use M-Pesa. For transaction purposes. Current. Account number can be your number. Just give any number. Then you enter opening balance, what is there. If you use M-Pesa, just guess. But in real life, you put the correct amount there. You have to put the correct amount there. The next one is current asset. You can see the current asset. Current asset are like debtors, people who owe us. Let's skip description and all this so that we are able to save some time. That's our current asset. We can have other current assets. We have liabilities, current liabilities, creditors, the people here. Don't owe people a lot of money. Then you can always choose account type. Is very important. You just change it from here. For example, let me say long-term liability. We have some loan. Take note, a loan is only long-term liability. Once the repayment period go beyond 1 year, if it's less than a year, we put that as a current liability, or rather current liability. With that amount of money, let's also create what is capital. Capital, that is equity. You see equity, that is equity. It's the money for the business, equity. Then you have internal balance. Can put any figure. You know your businesses, so you stick to that. That is done. The charts of account is done. Making, save and close. This will make our books ready for transactions. And let me remind you a small thing I said a while. We say that all these programs we use, they obey the law of accounting circle. And accounting circle, there is a rule they obey, and all of these rules I'll be talking from time to time, so that at least you are able to find out the real things that needs to be done. And now don't forget that we have these programs, and remember I said that in accounting circle, let me just take you through it briefly so that I show you how these programs obey that rule. In accounting circle, we normally have journalizing, we have posting pre-trial balance, adjusting entries, posting trial balance, and then we do those depreciation, reconciliation before we do activities that normally enable us to prepare our books for the next financial year. And journalizing involves posting of this account, what we've been doing, charts of account, to their respective account. You post those transactions that affected your book directly or indirectly into their respective account. That is journalizing, like making journal entries for each and every individual transaction. Then in the manual way, we do journalizing, then posting, then pre-trial balance. In the machine, once you do journalizing, like what we are doing, we are making journal entries, posting those transactions. Automatically the system does the posting for us. because once you do the journal entry correctly, posting is done behind the screens there. Then pre-trial balance, like right now, let me go and run pre-trial balance so that at least you can see. For example, you come and say company, charts of account, reports. We shall still have a special bit on report. Trial balance. Now you can see our trial balance, and you filter it to give you everything. So we have our debit, we have our credit related there. The goodness is that it has balanced, and you can see that is called trial balance. And this trial balance, you can export it to Excel and give a bit of amendments to it before you import it back. So that's the magic with the QuickBooks. You just see in a new workbook, you export. Don't worry more about it. Even if you are not an accountant, this skill is very important for everybody who is a business owner and you want to run a business, or an entrepreneur, or for personal financial management. So you see, I've already exported it to Excel. So ladies and gentlemen, don't worry, we are going to do this report in a detailed manner when it comes to reporting. So keep your eye closely, watch this video still full, and there are series. The best way to watch this video is to go to the channel and you look for playlists. If you get the playlist there, you'll be able to click on the particular video that you want, because we have a bunch of videos and we have arranged them in playlist to enable you to get access to what can be helpful to you instantly. But don't forget to subscribe. Now we come back to our QuickBooks. This is our trial balance. Now the goodness with the QuickBooks is that you could run these reports anytime of the week. You schedule what you want, you get it from there. December 2020, this week alone you can get that one there, and that's what is there. There are other reports which we will cover under special reporting in QuickBooks, like profit and loss standard. We still have nothing because we've not done any transaction, so our profit and loss or income statement is still empty. But later on, stick to the end of the video so that you are able to see how we do these reports. We analyze them and even filter. That's about the report. Now let me take you across to transactions, and this is what we want to do with the transaction. We want to sell things to our customers. We'll buy from our suppliers, then we'll sell to our customers. But remember this, before you sell to a customer, you can sell to a customer in receipt. If you do receipt, automatically you make deposits. If you do invoice, we will receive payments, then we record the payments there. So I'll do both of this. I will sell and I will do invoice, so that you are able to see both ways there. So that's for customer, and stick to the end, you'll be able to see how we do for suppliers. They are slightly different, because for suppliers, look at here, we have purchase order the suppliers. We have to receive the stock, we enter bills before we make the payments. There are times that we want to make transactions, or maybe we are purchasing something in cash. We don't follow the whole of this process, so you'll be able to see that one there. You should be able to compare the two. Like when you are dealing with the customer, is a cash transaction, just know there is a receipt. Whenever you hear cash, know the receipts are underway. If you hear the invoices, you know invoice bills your customer to receive. In fact, invoice is a slight document that is used to politely request your customer to make payment of the goods and services offered to them in debt. So that's invoice. So when I say here's the invoice, it means you've not paid me. I want you to make that payment. If I give you receipt, it means you have given me money, cash, or even check or M-Pesa, using various payment platforms that are available for your company. Now that is about the invoice. So let us make some selling. We want to sell to the customer, and this is how it goes. Customer center. I'm taking you to the customer center because I know from this customer center we'll be able to do a lot. And customer, let's start by sales receipts. Sales receipt doesn't have a lot of things. For example, I say customer sales receipt. And to sell to Elizabeth, let me sell computers. How many are there? 3 computers. That's one to sell for them printers. And 3 printers. Remember that tax, we have to put that our standard tax there, so that you know. And also sales number, receipt number, you can leave the system to generate for you, or simply, it's always important you generate your own receipt, because each and every company have unique or individual ways of generating their receipts. So you do that. Description, and you can also, don't forget to put some customer message like, it's a pleasure working with you, thank you for your business, things like that. Save. That is a receipt. Let me also give a receipt for another person. George is given bookkeeping. Done that to his 5 of his companies. Only bookkeeping. We have consultancy just once. And remember, you could give this one different tax rate, like consultancy can have a different tax rate and things like that. But don't worry, we will be handling a tax at large, like how you handle things like withholding tax. You know, we have value added tax, VAT, which I'm talking about right now. We have the withholding tax, and we also have the payee as a form of tax, and we have the income tax. I'll be able to show you how we handle all that one in a QuickBooks, and that will be a special video on taxation, and it's very wide but very simple because it's done by everyone. So it's not a must you be accountant for you to do this. You can do this one even with the zero accounting knowledge and accounting experience. You can still be able to do this. So those are receipts. If you do receipts, you just post in the system. Let me also do invoices so that I'll be able to compare the two. Remember, George and Elizabeth, they both have receipts. It means they've paid us. And if I want to come here, if I just click receipts, I'll be able to see everybody who have receipts come here. That's what I was talking about. Yes. Payment method, the receipts. So once you do receipts, they don't have invoices. So let's create invoices very fast. Customers, create invoice. Let's create invoices. Let's do George. George has taken 10 computers. Tax is still there. And George has also taken printers. 5 printers. And he also consulted once. And tax, sometimes they are 0 rated. Good, that is George invoice. Let's go and give Eliza invoice. Eliza consulted with us and consulted 3 times. I'm also keeping books for at least 5 companies. Which are all taxed. That is invoice. And now let me show you something. If you come to banking, make deposits, you can only make deposits to the receipts, the ones that have already been paid, because they are the only ones that are reflected in our books. For the invoices, no, they have not been paid. So I want to go and make payment of the invoices, and after making payments, I want you to pay attention to one thing, then we'll proceed. Now let's receive payments. Come, customers, receive payments. It's down here. As we receive payment from Elizabeth, you see the payment method here. You want them to pay us cash or check. Remember, if you do cash, you have to put the check number here. If you do check, you do the check number here. And this amount, they can pay half. Let's assume Elizabeth is paying us half this money. So how much is he paying? I want to pay, he's not paying all of it. He's paying 50. If you click there. So if a customer pay half amount of money, then you need to leave this one as an underpayment, so that they are able to pay the balance of 5,300 later on. Then you say save and now Elizabeth was paying off. I remember, if I still come to Elizabeth, supposed to pay, it will tell me amount due is there, amount, original amount was this one, and amount due to be paid is this. So at least you can get this one with Elizabeth. And supposing now we are paying, we are receiving payments from George. George is paying us 220, and we've decided that we want to give George a discount of 10%. 10% means George paid us 90% of this. So let's do it very fast. You always have your calculator in the QuickBooks and you can use it much faster. Use calculator. Let's assume we gave George discount of 10% or even 15, because we said for everyone who is going to make quick cash payment, all of it is given a discount. So paying George paid 85% of this. That one means he's given 15%. This is the amount George paid. Yeah, this is the amount George paid. 191,337. We paid it in cash. 91,377.5. This is the receipt number we'll give him. Now let me show you something. If you happen to give somebody, payment should be this one. Oh sorry, I did it in a wrong place. Memo, you can just write 15% discount given. Discount offered, discount awarded. Now if you click this one, this is the amount. Now take note, if you happen to give a customer a discount, you don't leave an underpayment. You have to write it off, because you can't meet this customer one day and you ask them that, by the way, that discount I gave you one day, I need to use it. No, once you give a discount, you must write it off from the books. It is a liability to the company, but giving a discount to customer, you have to write it down. So you write off an extra amount, but for half payments, you leave as an underpayment. So you take note for that. So that is it. Then you have to write this one from our bank. We are writing it off from our bank. Your bank. Yes, we have a family bank here. What code is just standard. You must always write that one off from the bank. That is, we have made sales to the customer. Now let me show you something. When you sell to the customer using receipts or invoices, receipt means the selling is done in cash. In fact, the goods and services are bought in cash, and invoices, they mean that they are bought in debt, then paid off later on. Now the procedure doesn't end there. You now have to make deposit to this bank, and that's what I take you now to the workflow. If you do sales receipt, you have to record to bank. If you do invoices, you will receive money, what we have done, and you record the deposits. Then later on we'll do the reconciliation, things like that. But now, simple step, this is what we've done. We've done this one and this one, and we've also done this one and this one. We want to do recording now, general recording. When you are recording, you record receipts and you also record the invoices that have been received. Remember, some invoices are pending, so you don't record what is pending. Nevertheless, it doesn't appear in your transaction when you are recording. So to record, you just come and say bank, make deposits. If you say make deposits, take note, you will see the receipt, and the payment. Some payments are in cash, some are in check. The first receipts you see are the ones that were originally created from receipts, so you don't even need to see the payment method here. They were receipts, so that's the receipt. The second one is the same, but for this one is cash. George Wiz gave us cash and he was given discount, and this one is also Elizabeth. So we can deposit all of them at once or one by one, depending on the dates. Like if your bank has a culture of making a deposit on a monthly basis, then in this month you'll do that deposit. Or on daily basis, there are banks that do deposit on daily basis, organizations that make deposit on daily basis. So you do that one, you say okay, and if you say okay, you have to indicate you want it deposited to your bank, to your M-Pesa. I think not M-Pesa, because currently M-Pesa doesn't hold much, even though it holds 300, but you can be transacting millions, and that is too much for M-Pesa. So I guess you go to the bank, you say 7M, yes, then you go again, you click what you want to deposit, you say okay. Don't forget, this must be indicated where the money is being deposited, because that will help us in reconciliations later on. So let me just choose this two, then you can select all, select none, then you say okay, then deposit it to bank, save and close. Now in short, we have done invoices, we received the payment, and now we've recorded those payment. Equally, we have done sales receipts and also make that recording. Ladies and gentlemen, in our next video, I'll proceed on with the transactions, and I'll be able to show you in detail how we handle suppliers, how we handle goods refund, that is refund ins and outwards. Remember, refund inwards is normally done by customers. They refund goods due to faultiness or some goods that have not met certain criteria, then they are refunded. Could be faulty goods, so those are refund goods. Refund inwards. Refund outwards happens when your company happen to refund them to suppliers. We'll be able to handle those in our next video. Once again, if you have not subscribed to this channel, don't forget to subscribe the channel, and comments, give thumb ups to our video. Comment below what you want us to talk about, what you want us to adjust, what you want us to do to be able to create more quality videos for you. Thank you very much for now, and see you in the next video. Bye bye. And remember, welcome again to RAR Business Institute. There are materials linked below, and if you need these programs, caring is sharing, or sharing is caring. Get the link below for these materials. They will really help you. Bye bye.